Today, every day, small cap investors visit Agoracom knowing this is the day to discover the world's next great company, to have their dreams come true. That's why I take to the open road, to find them, to tell their stories, to engage them, to bring them to life, because they want to connect with you from your office, your phone, your home, anywhere. Agoracom, find your dream. Welcome to CEO Interviews, a production of Agoracom, in which we take the time to speak with small cap executives about what's going on at their companies. Back with us again, we're happy to have him as always, Paul Gill, CEO of Lomiko Metals, trades on the TSX Venture Exchange under the stock symbol LMR, and for our friends in the US, LMRMF. Now, for those of you who might be new to the story, Lomiko is in the midst of proving up a very high-grade graphite deposit. That's the Loutre Flake Graphite property. It's high grade and located about 120 kilometers northwest of Montreal. So it's in a fantastic area. It's got two great zones, the Graphene-Battery Zone and the REFRACTORY Zone. They've reported multiple 100-meter intercepts and multiple high grade zones as well. And that's what we're here to talk about. Paul, welcome back.
Thanks, George. Thanks for having me back on.
And we're not just going to be talking about La Loutre today, but I think we're also going to be having some great conversation about what Corona means to the global supply chain and how that's going to impact you specifically and the graphite, the graphite supply chain. But let's talk about La Loutre first. The news that you put out a few days ago, and I'm reading this, Lomiko and Quebec Precious Metals agreed to update 100% option of the La Loutre Flake Graphite project. So you're committing 1 million shares and $1.1 million of spending by 2021. What precipitated the move?
Well, we've always wanted to have 100% ownership of the La Loutre property before we do any kind of work on the PEA or proving up the exact numbers that are in the ground. And so we had a chance to extend the agreement that we had previously with Quebec Precious Metals is the new name of the company. So we were able to get that done now. We're looking at, I think, a long period of time in order to complete that transaction. Gives us time to get permits to work on the project and get on with metallurgy and some of the other work that we want to do.
And was this almost the final hurdle? Did you want to have 100%? So you could actually, make the moves and do what you got to do in terms of metallurgy, Fortitude 101, eventually PEA. Is this the catalyst?
Yeah, the important element here is that you own 100% of the property. Then you are able to do metallurgy to prove what's there. That will move right into the 43-101 resource calculation. And we think that's going to be very good. And that resource calculation, along with environmental studies, community studies, and graphite characterization studies, will allow us to create a preliminary economic assessment. And the reason why that PEA is very important is that allows us to get offtake agreements at that point in time. So we've got a plan in place. We've got milestones we have to meet, and I think that this is what we wanted to do, and we're continuing along with that path.
Only because you mentioned it, I'm going to veer off a little bit and ask, do you have a level of confidence yet that offtake agreements will be a part of the future? Have you seen the requisite kind of interest that leads you to believe that?
Yes, we have. We've seen offtake agreements with Nouveau Monde, which is our nearest competitor. We've had other ones that were signed in the past on an MOU basis. There is a demand for the material. What did happen in the market, generally speaking, in 2018 and 19 was that we had African producer Syrah, which is actually an Australian company, Syrah Resources, come out and start producing, and they put a lot of money into the ground in Africa, in I think it's Mozambique, sorry, And the problem ended up is that the product that they were producing wasn't getting enough. They weren't getting enough dollars for it. So they'd spend $700 pulling it out of the ground and processing it, but they'd only be selling it for $400. That's not a viable situation. So they blasted out a bunch of this material very cheap, killed the market, and that basically stopped anyone signing offtake agreements with anyone. And so that is, that's part of business. It's part of, commodity supply, that you have to understand that there's buyers and sellers out there that have their own mandates. And these sellers, just basically wanted to pay all the bills they had. So they didn't realize they were going to really wreck their own company doing it, which they have. But they're also put a dent into the general market of graphite, which, eventually will be able to support those kinds of mines, just not now. We just don't have the penetration of electric vehicles into the consumers right now.
But that's also okay with you because you're not ready to supply the market right now anyways. So if that's 2 to 3 years from now, that plays right into your hands.
Yeah, and what it does is right now with the depressed prices, we're seeing companies go bankrupt out there. I mean, it's a sad reality, but you have a couple different companies that just aren't able to raise the funds to get to production right now. So a lot of guys that were ahead of us, Mason Graphite, Northern Graphite, Graphite One, that may be potential competitors, weren't able to get financing to build their mines and build the processing facilities. Mason has decided to go into the processing business, which is interesting, rather than the mining business. Nouveau Monde has a pilot project going right now, and they're waiting for a phone call from Tesla. So it's a great marketing.
Why are they waiting for a phone call from Tesla?
Well, it's part of their marketing, and I think it's they have a great video.
For thinking marketing, or actually their marketing?
Well, it's just their market, the way they're marketing to their own shareholders and getting confidence. But I like Nouveau Monde's a great management team, and we're kind of working at the same types of projects. And there's going to be a need for many of these projects within North America. And I think what we see now is a whole supply chain disruption that might benefit all of these companies. And so that's the big news right now.
All right, so let's talk about that. And global, look, nothing has happened yet because the whole world is dealing with coronavirus right now. But you hear the rumblings already that this is going to have a massive impact on global supply chain, specifically on China being the de facto supplier to the world for so many things, for reasons that we don't need to discuss right now, but that's just the environment. So what could that mean to companies like Lomiko in terms of two things? One, your graphite becoming even more valuable, and I don't mean in terms of dollar value, valuable in terms of more demand because you're in Canada, you're in Quebec, you're quantifiable, people can touch you, you operate as a public company, so you're highly regulated. So one from that, and two from a lot of these battery manufacturers, these gigafactories changing, switching locations of where they're going to manufacture to either North America or the West. So how big of an impact, a positive impact, do you see potentially coming in this global supply chain, which I'm pretty sure is going to become an election issue? So we're going to hear about this. We're going to start hearing about this by June, July. I'd be surprised if it took longer than that. What do you think how do you think that impacts you?
Well, I think it's a big, huge impact that we have to take into account. I mean, they already were working towards sort of a North American supply chain model between Canada and the US, because it's a long-standing issue that all of the rare earths and many of the critical metals such as graphite, lithium, cobalt, etc., that are used in the economy today are not supplied in North America. it's like, okay, you're a manufacturer of whatever thing you want to do, like a car, but you can't make the steel here, so the jobs are exported. So, it's crazy. We can't have an economy like that. We're losing parts of our economy to China, and so that
For a
massive
long time,
change.
right? That's why we've lost so much growth. You can't get growth off the ground no matter how low you drive rates. So sorry, not continue. I wanted to kind of interject.
Yeah, no, that's exactly what Japan is going through right now. They can't compete with China, and so they're importing a lot of those manufactured products. You're giving away a lot of economic growth doing that. You can't do that in the long term and continue to grow as a country. And so we're a country that I think is in a good position, being right beside the United States, one of the biggest economies in the world. And so we have the material in the ground, and Quebec is especially a good place to be
Sure.
because they have a good mining jurisdiction, good mining laws. And I think with the general global supply chain disruption that's going on, they're looking to supply this material and perhaps even start building these mega factories in Canada and the US. And I think there's 5 or 6 underway right now. There could be more.
So let me ask you, Paul. Nothing ever happens in a perfect world, but if everything went your way reasonably in terms of raising some money and going through metallurgy and 43101, all those kind of things, how far away could you realistically be from being at the PEA stage, I guess, where you can start to sign offtake agreements, and B, actually start delivering on those things? What does it look like for you guys?
Yeah, I think right now to get to the PEA is about 1.5 years because we'll raise money to buy 100% of the property. That's the number one task. Then metallurgy, which takes about 3 months to come in. That's one of the big risk factors you want to remove. Graphite characterization is a large flake, medium flake that can be converted to spherical graphite. You're going to do well. And then you have the 43101 resource. You'll define what you have in the ground. And also what's really important for us is to also use that graphite characterization to define exactly where it's located on the property. So if there's a section that's high carbon content, high grades in the ground versus the waste rock, and meaning it can be popped out really easily, that's high value material. So we need to define exactly where that is. And if there's pockets of that near the surface, all of a sudden those can be reported in terms of spherical graphite value, which is $27,000 to $3,000 per ton US now, as opposed to the actual average price for graphite material, which is probably $700 to $800. There's a whole range of this material. So we want to be able to supply that high-end material. That's the most important market for us. And then everything else can fall into place with the other markets as we're producing that high-end material.
To get that done, though, you're going to need to raise money along the way. What's the appetite out there right now? On the flips, and I can see on the one hand, naturally, the easy part to predict is that it's difficult because a lot of liquidity a lot of the risk liquidity has kind of gone away, or at least hiding for now. But on the flip side, you're a company directly related to the emergence of electrical vehicles in the next decade for the next 50 years. So which one of those plays stronger so that you guys can actually start, closing the money that you need?
Yeah, well, a public company, generally speaking, like us, junior mining, depends on retail investors, and retail investors are pretty scared right now of putting any money into anything. So that's the difficulty we face with retail investors. On the flip side, institutional investors are now looking at deploying large amounts of capital to these long-term projects because no one's building malls anymore. No one's building these huge infrastructure projects as much. So they need to deploy, they have capital to deploy that they want to get returns on. And so we're in a great position to chat with some of those people that are going to, be able to give us $100 million to build a project out, and then wait another 5 or 6 years for us to be able to pay that loan back out of the revenue and profit.
Let's switch gears a little bit to where the market may be going, because there are two factors that I see playing off each other. And when I mean the market, I'm talking about the demand for electric vehicles going forward. On the one hand, Tesla, despite everything that's gone on, I'm looking at right now trading at $708 a share. So relatively unscathed. I mean, some damage to it, but you talk about going from 900 to 708. You're still really strong, considering in October is sitting below 300. So it's held very strong. What does that tell you? And then we'll get into the oil supply shock side of things. But what does Tesla's performance tell you about the future of electric vehicles?
Well, let's listen to the wisdom of the markets. The wisdom of the markets has told us that Tesla was one of the last to go down in this particular, in all of these big companies, and it was the first to jump back and recover its value. So what that tells you is not only is the industry a very good industry to be in, but Tesla is a bellwether stock that people are looking at in the same sort of context as Apple, Google, or Amazon. I mean,
yeah, they're looking 5 years out. They're not looking 5 weeks or 5 months out.
Yeah, and there is a loyal customer base and a loyal shareholder base, and they're almost copycats of each other. The loyal customer base will continue to buy Teslas and continue to advertise Teslas to their family and friends and everyone else. And this is, of course, high net worth people. It takes a bit of money to buy a Tesla, but there's a good portion of people that are going to be buying those kinds of cars, and they just stop buying their Escalades and their Rolls Royces and their other cars, right? So Tesla's supplanting some of the demand for those types of luxury vehicles right now. Whether they penetrate down into bigger markets is the next step that we'll see. But they're well established as a supplier of luxury vehicles right now, and that's an accomplishment that we have to take or tip our hat to.
And I'm not even sure they need to penetrate down into the more affordable, because maybe somebody else will just pick up that slack. Tesla might end up being the Mercedes, BMW of 20 years ago. Not now, they got these smaller vehicles, but they may turn out to be the Mercedes or BMW of the electronic vehicle space, and let somebody else have. But the bottom line is, even though they're focusing on that, they still got a market cap of $126 billion, and it jumped here. Look, just at the beginning of April, it was sitting about $460, and in 2.5 weeks, up to 709. You're talking about $50 billion of market cap that's rebounded. So people naturally believe that electric vehicles are here to stay, no matter what happens in the next months out of Corona.
Yeah, there was an interesting situation back in October where Elon Musk, or maybe it was summer of last year, where Elon Musk went to Saudi Arabia, came out and said, "Oh, we're done. We've got investors." And then he got slapped with a $40 million fine from SEC for saying that, because the stock price of Tesla went up. But he didn't care, because you know what? He's got all the money in the world behind him from Saudi Arabia. I think that's the fact. If you have a limited supply of capital in order to grow your business and to deal with any cash calls and everything like that, you can't lose. It's like betting against the house in Vegas.
Yeah.
So I see all these Tesla bears talking about fundamentals, and people saying, "Oh, well, the car, it's not run well, and this and this and that." Look, guys, wake up and smell the cappuccino, okay? This is happening, and you better get on the train, because Tesla's going to be like a huge win. And that's great for us in Lomiko, because we want to be a supplier to those kinds of vehicles built in North America.
Hey, and for those of you out there that hopefully are following Agoracom, whether it's on LinkedIn or Twitter, you'll find my call on Tesla, just as a side note, pat on the back, when is that? $40. $40. I don't know, 3-4 years ago. It was April 1st also. Yeah. And I said, Tesla's a buy at $40. It's a multi-generational buy. This is it, because it's got a leader like Steve Jobs, and it's got a product like Apple. And I talked about, you're going to see it at $600 someday, and here we are at $708. Now I sold lower than this, but I'm still happy. But there's no doubt that that's what. But let me ask you the flip side, which is the price of oil has gone through a shock. The entire oil industry has gone through a shock. We all know the numbers. Even the futures are trading at $10 a barrel right now, $10, $11 a barrel. The spot prices, you're hearing these horror stories that I've gone double-digit negative because buyers actually have to pay the suppliers to keep it because they have nowhere to put it. Now, we know that's not going to stay like that. Eventually, the economy is going to get back on its feet. But there is a real possibility of oil being at being between $10 and $20 for a year or two, right? Yeah. So the question I have for you is, as the consumer gets used to really cheap prices at the pump, significantly cheaper airline tickets, because oil, the fuel is the number one. Fuel is one of the one or two top expenses for that contribute to plane tickets. Is there a risk here that the electric vehicle movement actually pauses or takes a bit of a step back? You can't stop it, but pauses because people are saying, "Hey, this is just too good to give up. I'm okay with 40 cent per liter oil at the gas station."
Yeah, it's an interesting question, and that's something that people have to examine. And I think that there's a lot of people writing about that situation right now. But here's my view on it, is that the Tesla owner isn't necessarily concerned about the price of oil or switching to another product. They've got an Apple type product, meaning that is their life. They've got the Apple computers and Apple phones and Apple iPods and this and that. So that's the same thing with Tesla. You're going to have a Tesla wall. You're going to, you're going to have solar panels or whatever. You're going to buy that product because you're a believer in that product. Absolutely. That's not going away. And I think the price of oil doesn't make a darn bit of difference in that.
I say you can say damn. That's all right. But what impact does it have on the non-Tesla owner, George and Bob and Mary, who have been thinking, yeah, I got to go electric soon. And now they're seeing some crazy price at the pumps and saying, well, I don't go electric soon because I'm not spending I'm spending 1/3 to 1/4 of the money I was spending last year on my gas.
Yeah, I think there's a lot of people, a lot of companies that are playing for that cheaper market, whether it be GM or other ones in that ilk. But they're going to be hurt by it more than the Tesla would be, because Tesla's at a different level. People talking about a $15,000 or $16,000 car that's electric versus internal combustion. They might just go for the internal combustion because now operating costs are a bit cheaper. But that isn't going to affect the luxury owner as much. That decision, the elasticity there about the price of oil doesn't matter to someone who's got a plug-in and has changed their lifestyle, because it's a lifestyle change. I think it takes a lot to decide not to be to go off of oil and start plugging in your car. That's a different situation, right? I mean, when people start doing that, they're not going back. I don't think they are.
Paul, thanks for joining us. I love the insight on the global supply chain, where electrical vehicles are going, and how that impacts you sitting just over 100 kilometers outside of Montreal with amazing infrastructure, which is amazing access. For those of you who don't know Canadian geography, great access to the northeastern or the entire eastern seaboard of the U.S. market. So, glad for you to join us, glad to talk about it. And and glad to see that Lomiko is actually moving forward, with this press release, with this news out of Quebec Precious Metals, and going out there to raise the funding to move everything forward. That's a great sign, and can't wait to have you back on when you're moving the company forward on the next milestone.
Yeah, thanks so much, George. And you know what? We're going to keep working away at this. That's how you get things done, is you continue with your plan and execute on the plan. There might be delays or diversions, but the plan is there, and I think it's a solid one. Thanks very much.
You've been watching Paul Gill, CEO of Lomiko Metals, trades on the Venture Exchange on the stock symbol LMR, and for our friends in the US on the OTCQB under LMRMF. Look, I've said this on other webcasts. You've got a lot of time on your hands at home right now, or if you're working a little less than usual, or for some people, not at all. We got a lot of time. There's only so much time you can spend on Netflix. There's only so many walks you can take. Use this time to do your due diligence. And Lomiko Metals is an amazing company to do due diligence on, because Paul is very open, communicative. You can find him on LinkedIn, find him on Facebook, find him on Twitter, see all the things he has to say. We've done a number of interviews just since the fall, right? That maybe probably about four, maybe 5 interviews. Watch those, take a close look. And when you see the company is actually, locking down 100% of La Loutre based on this latest press release with Quebec Precious Metals, they're serious about their future. Great time to do your due diligence. And when you have your questions, get over to Gorecom, start asking those questions so Paul and his team can answer them for you. You just might discover your next great small cap company. So thanks for joining us, everyone. Have a fantastic day. Continue to stay safe, and we'll see you next time.